2022. Is it?
Yay! Here we go. This is it. Good morning, world. Good afternoon here in London. Good morning in New York, 9 a.m. 8 a.m. sorry. And we're here. NFP day. Perfect. What most traders are scared of, don't know how to trade. We are now trading it. We're going to be doing it. Good morning to you, sir. Good morning.
Early over here. Sun's not even up.
What is it, 8 a.m.?
That's 5 over here.
5. Oh yeah, well you are. Yes, of course. You're on the other side.
On the other side of the world.
Early rise. This is it. This is it. NFP day. What we've been waiting for. Good start to 2022. Yeah. We tackle what everyone else is scared of. What people don't know, don't understand. Even Bloomberg haven't got a clue. I love it. Been watching them for the last hour and they just haven't got a clue. People say it's going to be 250. People say it's going to be 450. People say 900. I love it. For me, I'd like it to be good news. So we get a push back up on US 30. Back up to this level 3.6. And also we get the drop on gold. We've got a nice double M, double top. Look at that. Perfect. Drop already. Second leg on gold before we get to NFP. As it's pre-market, I know that it's going to go the way of the news initially. Gold, US 30, and gold will go against it. Then we'll get the spike the opposite way. So again, if you miss out on the initial move, which you can do because the news might not come out before price action starts moving, don't panic. Just wait and catch the pullback. Because like I say, we expect gold to go the way of the news eventually. On the news, it should go against it, and obviously we'll trade against it again when the market opens at 9:30 a.m. New York time. So same strategy as we've been doing all week really, but just with NFP you have to go the way of the news event, you know what I mean, with US 30 and the dollar initially, because such a powerful news event. Then you'll get the pullbacks. And that's where you can scalp a lot of money, and that's what I'm going to try and do, you know. So we're going on normal lot sizes that I normally use, no different. See gold already bottoming out. Look, so if the news is better than expected, this could drop even more back down. 1786. We've got levels here we can take profit on. Here's the heavy support, 1784. I'm going to mark that now. Potential level. Above. This could be the TP. If the news is better.
One of the good things about learning and trading fundamentals is we've got, I won't say a clear-cut indication, but we've had some relatively good news leading up to NFP. It kind of gives us a little bit of an indication what we can expect today.
Absolutely, yeah. Like I say, the ADP, it's worked out a different way, and Bloomberg doesn't seem to ever like it. But I think you're right. I think it's going to be better than what most people are expecting. And like I say, I've never seen Bloomberg ever get it right. And they're saying estimated 4. I've never seen the result anywhere near. I mean, on my FX book, they're saying 400, as you can see here.
Well, at the end of the day, you got to remember who Bloomberg is funded by.
Yeah.
So they're going to drive the markets in the way that they wish they to go, and despite fear, for it to push the markets the way that they need to go. And then finally, the markets will catch up after everybody stops listening to the media and it'll return to the levels that it's supposed to be at.
Yeah, exactly right. Yeah. You can see there, look, it's been wrong. Well, all of it's been wrong, every single one, but some people are saying it could be up to 1 million. Look at that. It could be a real big jump, in which case the markets will move crazily and gold will drop. US 30 will go up. GU drop. You know, so it's a good one. It's just how quickly we can get in on the trade, as always. And like I say, don't panic. And obviously, if you get the big candle and you enter in at the bottom of the candle, you're stupid. You know, you want to be looking for the pullback then. And what you'll find is the second candle on the 3-minute time frame is the one that pushes in the right direction. The first one can spike around, pull a nice big long candle. You don't want to be getting in when it's a full candle, obviously then you've missed the boat. So you just wait for the second candle, wait for the next 3-minute candle to come along, and that will usually go the same direction as the first one, so you can get in on that. There'll be a continuation is what I'm trying to say. And watch the RSI as well. If the RSI is obviously heading down south, then obviously that's where you need to be going. You need to be selling, you know what I mean? Don't go against what the indicators are telling you as well as what the news is telling you. So don't panic is what I always say. I think people panic too much, and obviously you're going to get bigger spreads, but don't worry about that because they get swallowed up in the move because the move is that big. And also you know, the commission and stuff and everything. So, you know, and also there'll be a delay. A lot of brokers have to click probably 10 times to get 3 trades away because, you know, brokers like not executed the trade. So, you know, don't just sit there and click once and go, oh, I didn't get the trade. You've got to hit it and get in. You know, this is why, like I say, a good way to do NFP is have a separate account set up just for trading it. If you want the risk, whatever you put in there, you know. There's different ways you can do it. But the thing is not to panic. Watch the price action. Watch the result. You know, obviously, the bigger the result is away from the consensus, the more move you're going to get, and the more assurance that probably 2 or 3 candles will go in that direction before we get the reversal. If it's around about as expected, then it's a bit more of a mixed bag, so you have to be careful. So, but if it's like I say, well away from the result, which I think it will be, either one way or the other, it'll either be 200 as opposed to predicted 4, it'll be 900 as opposed to whichever one of those it goes. Doesn't really matter to us whether we're buying or selling at the end of the day. I'm not fussed what the result is, just as long as there's a big enough gap from what the general consensus is. Then, like I say, look for 2 or 3 candles all going in that same direction. If you miss the first one, don't panic, get back in again, and then we'll just sit tight, wait for the pullbacks to come. Then when we get to the US Open, we'll trade it again going the same way, and that's it. Then we're done.
Typically on NFP, we usually have a 5 to 10% change or gap between the consensus and what is expected. And as long as we're above that 5 to 10%, typically does what we need it to do.
Yeah, exactly. Yeah, I think you know, this will be. I reckon it'll be about. I reckon it'll be 700-800. So
yeah.
That's just. I mean, you know, can't base that on anything other than what we said about the ADP, all the other results, all the other news events that we've seen recently. Everything on jobs has been nowhere near predicted. You know.
That's still a number that's climbing. It's above 50, 68 punchy.
Look how trading view do this look? They're already given the result. Look, that's got to be a glitch. Look. Average hourly earnings so it's up better than expected, but the result's not for 17 minutes.
Maybe they got that insider tip.
Yeah, but hell, they'll get sued for that. Well, if the average hourly earnings year to year are up by, you know, up to 6%, then that means more people in jobs. So that means we are looking at a good result, but that could be, I mean, this is what came out, 5.9. I don't know if it's just glitched. Who knows? God knows. But if that's an inside edge, I'll take it.
That's the beauty of learning to trade fundamentals.
Month of December. Still to come. Your payrolls report, 8:30 Eastern Time from a snowy New York City. This is Bloomberg.
Snow in New York City. Live. Look at that.
Oh yeah.
Cold, man.
With the first word news, I'm the US
Pennsylvania DOT issued a no commercial vehicles on the Pennsylvania Turnpike, and they're getting hit hard.
And the unemployment rate is likely to dip 0.1% to 4%.
May have added 447 jobs last month. See, that's bullshit. That's not right. That's not going to be.
No way.
Hospitals are struggling to get the workers they need to treat patients. That's led to skyrocketing wages.
That's what they say may have. That's a get out clause, isn't it? You know what I mean? May have.
2 years ago.
Yeah.
Love it.
And it's a test for European Central
I'm
Bank
beating the
officials
broker
to
this time. I got trades going both ways.
Inflation in the
Gold.
Euro region speeded up
Yeah.
last month.
Oh, we should get trade both ways. Yeah, we should get the initial move if we're quick enough, you know, against the news. Then we should get the pullback as well. So on gold. So I'm sticking with gold, and you know,
And you can add John Legend to the list of
got 15 minutes to go.
market for music rights. Legend has sold a catalog dating back to his first album to an alliance of private equity firm KKR and music company BMG. Terms weren't disclosed.
DAX
Last month,
dropped
though,
out.
Bruce Springsteen sold his entire catalog for a reported $500 million.
That's what silver. Silver did a double. Look at that. Silver was a nice sell as well from here. That perfect. Beautiful buys. Nice sell here. Look. Extra sell here. Buy here. Sell here. Oh, that's so simple. There's so many entries you could have done on silver there. Got in easily on that. Got in again there for another buy. Then you could have got in again. Buy. Could have got in on that sell there. Then you could have got in on the sell there. Then you'd have got in on the buy there. And you'd have got in on the sell there. Look at that. How easy was that? 1, 2, 3, 4, 5, 6, 7 winners. Damn. You even had the divergence. Look at that. There, that bearish divergence. So 1, 2, 3, 4, 5 candles, bit of drawdown, and then bang. That was easy. Oh man, I tell you, when I see double tops, I love it. There's such a good pattern. There is such a good pattern. Of course, now you can look for. Well, again, gold, silver will be affected by NFP, so it'll be interesting to see. US30 is a bit more of a mess. Look, if you zoom out, look, you can see it's basically been in a range for a couple of days after the big drop, big sell-off. Tried to pull back a little bit, reached that level 36544. I line across that actually. It's a key level. Bit to break. If it breaks that level, this is where we're going back up again. So this is what I want it to get to ideally, and take some buyers back up to this level here. Look, that's where this is a good scalping range between here and here. You see we're well away, and since that, it's basically just been stuck in a range, hasn't it? NFP could get it back up. It's got to break this area of resistance. It could shoot it back up.
Yeah, but if you listen to the media, stocks are edging higher. But it's sold off.
Yeah.
How much money do you think you're going to have to sort of pump into everything right now? You also mentioned, this is an announcement from last year, that you're going to start a factory here in the U.S. Where are you in that? What kind of money are you looking to have to deploy?
So far, been fast.
It'll be interesting what they report at the same time, but we'll keep watching gold. So there's my TP, could be for spiking if it's good news, and obviously to the other way, we're looking at our zone here. Look, this arrow doesn't indicate the direction, by the way. It's just I just put it on the chart just for when the NFP comes out. But above here, look, this could be the spike the opposite way. If the news is worse than expected. I expect gold to hit either of these levels, really, regardless. So they look like W, look, nice W, second leg, then the M, second leg. For people who don't believe in the patterns, look, there's your second leg, W, and there's your second leg, M. See?
The wave is real.
There's your second leg, M. So M, W, M. The wave pattern exists. Again, there was multiple areas you could have sold a couple of times there. Could have got a little buy there. Could have gone back in on a sell here. Another sell there. Then you saw the divergence. Wait. You got a cheeky buy on here. Went in again on the buy there. Then here. Then sell here. Sell again there. Buy here. Buy again. Buy again. Sell again. Sell again. So again, 8-9 trades, all winners. You just focus on one thing.
The brilliant Tom Porcelli there, the chief US economist at RBC Capital Markets, 12 minutes away from the payrolls report in America. From New York, alongside Tom Keene and Lisa Bramwitz, I'm Jonathan Ferro. Going into that jobs report for the month of December, your market looks like this.
Gold spiking back up.
Up around 0.06%.
Not looking at the chart, just looking at my broker.
Single basis point to 173.37 after a big move higher this week of around 20 basis points on the week. The payrolls report coming up.
Yeah, look at gold spiking up there.
50K. Tom, I offered a sneak peek of next week. CPI and
get ready for that drop.
A lot of people have asked me
that's it. The higher it goes, the better for us. But it's just broke the neutral zone.
From 6.8% previously. That's your headline.
They're saying 447.
Food and energy, so-called core.
I'll eat my hat if that's 447.
The previous number. The actual number, comes out Wednesday morning.
And the raging debate about where that is as we fold into March and onto the summer of 2000.
We got a lot of buying pressure back up to that 1830 zone. So once this news filters out and we either find the bottom or we establish a base of support, then we're looking to buy back up to 1830. Doing some top-down analysis this morning.
Yeah. We've got a TP set there at 1796. Like you say, and then 1805. Look,
I've got an entry sitting at 1795 and also one at 1789. So either way it goes, I'm putting money in the bank.
See there, look, there you go. Look, zoom out, we can see. So if it breaks here, we can scalp to here. If it breaks here, we've got all this to break to. And if it breaks here, like you say, we're up again.
Pre-pandemic level. So we've done a really incredible job recovering most of the ground that
was
lost
DAX
during
quit
the
messing
pandemic.
around.
And I think that's why it makes sense that the Fed would be moving to the sidelines, and it takes time to do that. So they got to get started sometime. But I think in terms of, I don't think they may be concerned about inflation, but when you look at their actual views, the Fed staff is talking about 2.1% inflation.
DAX typically pushes up too whenever US 30 spikes. There's close correlation between the German 40 and the US 30.
Yeah, definitely. Yeah, there is. Yeah, at the moment, yeah, they're very well synced together.
Most of it and I think we're in the final lap of getting everybody back to work.
That spike up, that was a great spike, look, and then all the way back down, it's just dropped.
They'll be back probably.
Dropped 200 points, look.
When you speak to the commercial clients of JP Morgan,
see how RSI has respected our average line. RSI, so I keep telling people, it's risky. I mean, you can enter the trades by all means, but it's aggressive if you're entering a trade before you see the RSI break the average line. Because look, it treats it like a support and resistance line. And here it is, look, it's gone up there. You could have thought this is a buy, and then look what happens, bang, it hits it and comes out of it. This average line really is a cool little thing we've got, that helps.
Really, really powerful. You can trade the bounce or you can trade the break.
See, like here, look at that. That was a buy off the bounce and the sell. And now you could trade the sell again. If you were, I'm not going to be trading now, but could have been trading this now for a sell, the bounce. Because you're going to get 5-10 pips easy on a bounce. And look at that, you can see now that's easy. In from there, from that top of that candle already, look, you're 7 pips up. You've got a 5-pip winner there on gold already, even with the spread.
We've seen it a couple times in the past. When we're doing things,
making sure brokers loaded up. Oh, we're loaded.
Businesses, the resources to pay workers when they're trying to find them.
Fold
it's a
back
challenge,
up.
but it's a
Jim,
great
I wonder
challenge.
though
Back
how
down.
much
Back down.
this is really a big
Yep.
business
Back
issue with
down.
respect to the fatter profit
Back
margins.
up, back down.
and
This
the
is what we like to
ability
see. This is what
raise
happens.
wages. I was looking at this NFIB study that came out yesterday.
I'm
that
eyeing
showed
that 1784 for a base of
percentage
support
of all U.S. small
for
business
this
owners say they
sell.
plan to raise
May spike
compensation.
to
That they
1783
did
and
raise
bounce back.
compensation in December.
Yeah.
A third said they plan on doing so in the coming months. Are they less able to do this? Do they have smaller profit margins because they cannot necessarily capture some of the efficiencies that we're seeing in the Walmarts, in the Targets of the world?
You know, I'm not sure about that.
6
It's
minutes.
possible, but I
6
think
minutes to
That's
go.
small business community has
6
more to
minutes.
gain from
We love
all
it.
the innovation, the automation that's going on.
Lambos.
Maybe they didn't have the resources to do this like the big guys have.
Not
And so they're
today.
benefiting from the same themes.
It was a good week
that
so
are
far. I don't want to ruin it.
companies. So you're probably right. It varies within the small business community. It varies. If you're running a restaurant, you don't have the same resources, the same flexibility. But honestly, I hear the same themes from business leaders at small and
Coffee.
medium businesses that I see in the
Dropping. Look
macro
at the gold drop now.
numbers. So
Gold drop neutral.
I think
Yep.
you're seeing, as a result of the efforts to try to manage this
What am I at for the week?
pandemic, I think they are also freeing up
2244 for the week.
Glassman, Jim, good to catch up with you, sir. Going into payrolls. Jim Glassman there of JP Morgan Chase Commercial.
That's great.
He's in the building. He's walked into the studio. It's Mike McKee.
Hit well
Drum roll,
above
please. 7 minutes away, Mike.
profit
From that
target.
jobs print. What are you looking for, sir?
We're on the edge of our chairs. Obviously, the headline number is going to get a lot of interest from people. Are we still creating jobs at a rapid pace? But remember, we had to look at the establishment survey's difference from the household survey last time. Household survey showed a lot more hiring than the establishment survey, and that pushed down the unemployment rate. We're also going to be looking at revisions to the household survey, seasonal adjustments. So it is possible some prior months could be revised one way or another. Sometimes they're revised up, sometimes revised down. It's possible the unemployment rate was.
I mean, ideally, you want every single result to go the same way. For us now, it'd be nice if it was all green.
Well, they're going to be important in the sense of, do we continue that trend? You were just talking about the small business owners. Do we still
I'm good
see
either
people
way.
paying up, and do we still
Whether
see
it's bad or whether it's
higher,
good.
It is. I'd just like to see US 30 come back up again, so I can, you know, I like buying it US 30.
The monthly rate,
Yeah.
with
It's just
Buying it
personal.
whenever it breaks the highs.
So that might be seen as a little bit of good news. Jay Powell was asked at his last news conference, do you see signs of a wage price spiral? And he said, no, not yet.
Mike McKee, thank you, sir. Leading
How
our
much
coverage
margin do I
in
have?
around
Oh,
about
right.
5 minutes' time. Your payrolls report just around the
Oh,
corner.
yeah.
Tom
I got
Keane, we
enough
heard
to
it from
drop
the
another
chairman
trade in.
himself. One of the reasons he made the pivot, he might have made it sooner and quicker, employment costs.
Well, the employment costs are there, and what I would go back to, John, just in the grind of doing surveillance as we have over the number of weeks, I remember talking about
TP set, look, there you go.
Nebraska
That's the-
unemployment at 3% something. There's Jim Glassman with 3.5% unemployment. John, I
remember there's like a 30-second, there's a 30-second lag on
that we're even talking
this
about
anyway.
anything but a fully employed America. It sure feels that way.
Unemployment right now going into
All
this
right, what
number,
was the
4.2%,
entry?
the estimate
1788.
4.1, the headline number.
On
You
a
know the numbers well
pond.
now.
3 minutes to go. 3 minutes to go. Look, we're on the countdown. We're on the countdown.
At the low, it's 150. What a move we've had in the bond market going into this one, up 23 basis points on a 10-year. Week to date so far. On to Friday on the session.
Хотите быстро выучить английский? Пройдите 5 бесплатных уроков в нашей интерактивной системе и
United States of America next.
Right, let's get ready. 2 minutes to countdown. Here we go. Get your fingers ready. Pump that arm.
10 seconds just to put in a trade. Brokers are lagging hard right now.
2 minutes to go. Fingers ready.
We know that it's highly transmissible. We know that 2 doses
Gold now ranging, look, as we had. So just that little bit of a
neutralize the virus, but not
lip. It's forming a kind of nice W pattern now. You see?
meaning that a third
So who knows? You know, but the pattern's no indication of the NFP, of course, you know. TA's out the window. You got to, you know, all we can do with TA is look at levels of where it might get to in terms of taking the profit with the spikes, but that's all you can do with TA. Any patterns, any, you know, tells you they can work this out with TA. It's bullshit. You can't. Nobody knows.
Too volatile.
Doesn't matter if it's been bearish for a year, bullish for a year. NFP can send it the opposite way in a second. So then eventually prices will, you know, it will go the way of the trend back again, but not until after the US Open. So got, you know, 90 minutes worth of potential scalping. 40 seconds to go. This is it. I love it. Get ready. Ooh, let's see how many trades we can get away.
I already got mine set.
Yeah.
That way I don't have to deal with broker lag.
I know. I love broker lag. I see Marcus is not too bad.
Yeah, but sometimes broker lag will bite you in the butt.
Oh yeah, of course. Yeah. It's all against you. Yeah, that's why you've got to be careful. That's why you've got to be careful. Like I say, you should be good for the first 3 minutes. And you've just got to hold. And as soon as you get green, take your profit. You know, it's just
5 seconds.
Yeah, good luck. Good luck, everybody. Let's see.
Yeah, brother.
To see what's moving the markets. Visit Bloomberg.com webinars.
199. Woohoo! Well. There you go. 199. Wow, 199. Worse than expected. Yeah, 211. Look at that, 199. So let's have a look. See what gold's going to do. Yeah, gold shot up. Look at that. As we expected. Watch it fill that wick.
Investing should be as ubiquitous as shopping online.
It should just
be something that people do.
Go. Trades are away. In on US 30, in on gold. Closing on gold, closing on US 30.
The United States of America, live from New York City on TV and radio
Ooh.
with Tom Keane and Lisa Abramowitz.
I did 1, 2, 3, 4, 5, 6 trades there on that initial. I got the sells on US 30 and I got 4 buys on gold.
Because the data seem to be a little bit delayed, the computer a little slow in getting things out, but we're keeping an eye out for the numbers as soon as they do break. Looks like a lot of people staying home because my internet is very slow. Maybe everybody's hitting the same.
Yes, nice.
Bloomberg terminal hasn't got the numbers yet either.
Market, the estimate, as you know, 450, the high 850, the low 150. That range might go into this one again, just like all of last year.
Buys on gold and sells on US 30.
To try to come back from
Perfect.
Pandemic, and we expected people to come back in September when
Look at that.
reopened, and they didn't. And we expected.
Oh, well, that's one that's push up, and then you should have sold at the top of that with US 30. The gold went the way, as we said, totally opposite look. And that'll push on up. US 30, look. There you go, look at the sell on US 30. Damn.
Headline number, big downside surprise, 450. The median estimate. Mike McKee, I know you're going to whip through the rest of the report. The initial read, a downside surprise on the headline number at least.
Take a look, John, at the headline unemployment.
Look at that.
3.9%. It was 3.2% going into the pandemic, so we are getting awfully close. That suggests to me, and I haven't looked yet, but it does suggest to me some big changes in the household side of things. Let's take a look at...
Yes, just got another $100 and $200 on US 30 on the sell. Look at that, told you it's coming down. Going to come down.
It's up 0.6.
Don't hang around too long.
Annual rate to 4.7%. That's down a tick from last month, but significantly higher than the 4.2% in the Bloomberg survey. survey. The participation rate is 61.9%.
Everybody got it wrong again.
Revised 61.9%.
They did the same thing last month when November came out.
Just before the break, that we could see some revisions today. The unemployment rate, by the way, was not revised. The number of people who are working, let's see, unable to work because of the pandemic.
Wasn't it last month whenever the market got it wrong and then they had to adjust the figure?
Yeah, they always have to adjust it. And they seem to get, then they try and make out they got it right by adjusting the figures. I love it. I love it.
Every single time.
53,000. Remember, there were something like 299,000 in that
private payrolls. So good. There you go. Look at that. Look at the drop on US 30 now. Look at that. Look at RSI just breaking the average. Just breaking the average now.
3,000. They're still 650,000
perfect
of where they were pre-pandemic. Manufacturing, 26,000 jobs, mostly in durable goods industry.
Look at that shooting down. Look at it go. Look at that. Watching it live.
Monthly gains averaging 38,000 over the past 3 months, so a little bit of a slowdown there. Transportation and warehousing up by
19,000.
Back up.
On that heavy.
The holiday period, because we've gotten into
yes, just got another 2 sales. Brilliant. Oh, no red this time. No red. I've done.
They don't need them anymore. And
there's all my trades. I've done 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 trades, 10 winners.
In the month of October, it had been 546. November only revised up by 39.
And that's all going the way of the news. Now, what you can do now is if you, I mean, I'm not going to trade anymore in US 30 because we're on the heavy support now, and on gold. I mean, look at that. Hit my TP. Look at that. Thank you. Hit that heavy resistance and bounce down. Just as we said. Was that perfect or what?
Money.
Thank you to the X trading system. Yeah, it is exactly. So now you can watch for the pullbacks and we can go the opposite way because we'll go the same way again on the US Open.
If you stripped out that headline number for payrolls, 199, the
but both US 30 and gold hitting
thought about the backdrop going into this number. For the Federal Reserve, let's go, isn't it?
That shot down too.
Well, I think for the Federal Reserve, it's further data. What I would say here to begin with is Ellen Zentner and Morgan Stanley absolutely nailed it. I took the revisions into account, John, and the number all in all is a little bit above her cautious number.
That was great. I mean, that was really good because the result came out pretty swift and my broker got straight in on the trade straight away. So, in fact, I've not added up what we won. Let's have a look. In 5 minutes, we're all done. I mean, you know, people can keep trading it, and then that's when you get burnt. Just, you know, check the price. Now look at gold dropping. Look at gold dropping now. You don't take a sell now until it crosses the RSI average line. Then we can get the sell, which is why I said gold will eventually go with the news because we're pre-new NY Open. Well, it's the same pattern every single time. You know, like I say, if you did miss all that spike, you missed all this buy, and you're crying about it, don't just wait because we know what's going to happen. Look at gold. Here we go. Here we go. Look, there you go.
And that jobless rate now is the lowest since February of 2020.
I'm studying up what I've won. So.
Jeff Rosenberg of BlackRock's going to weigh on this in just a minute. Mike McKee, another word from you, sir. Some more detail.
Yeah, looking at what happened with the unemployment rate, we had a very
listening to Bloomberg try and smooth over how they get it wrong every time.
68,000 last month when we saw that big drop in unemployment, 516,000.
You know what I mean? I love it.
Back to work. So that accounts for the number of people who got jobs, 651,000, and the number of people who reported they were out of work.
Okay.
480.
What's that?
Down by 483,000.
So 10 trades, and I won $584. There you go.
We'll have to reconcile that, but the news is still the
3%, and that is $584.
Really is going to catch the Fed's eye.
It's got our attention.
Profit in 5 minutes scalping. So we're halfway to our total. There we go. 584.
And we still got the open to trade.
Yeah. Look at gold. Told you, see, look. As you know, you think I'm talking BS. There you go. Look, here's the sell on gold now. Look.
almost 4 basis points
as we said,
on 30s to 2.112%. Joining us
doing opposite to the news, and then obviously we should get a buy again on, you know, once we get to the open.
Yeah, I think the focus here is that the headline.
Again, I've not got any trades open at the moment. I've done it. That's 10 trades. That's enough. But just watching to see any price action on this.
Paul's been a nice little buy entry at 1786. We're going to ride that wave.
The disappointment on the headline, and
Just to see if this is going to. I want to see if gold's going to push down, fill that spike. It'd be a good one. It's all over the place.
From the payroll report to the outlook,
I just set 50 pips, 5 pips as a level for it to hit and spike.
You know, we saw in the minutes earlier this week the discussion about, you know, reaching
cleared 250 on my NFP trade.
That has been decided. So the kind of the wage count is pretty clear, and we've had a lot of evidence.
It's ranging around. He's going to drop the RSI. Going to go 37.
I think the issue is, are they too strong, and are they a contributor
looking around that fast? Aren't doing it. Oh, look at that drop. Woohoo! Amazing.
Can you frame, not the certainness of it, but Jeff Rosenberg, can you begin to frame in your mind that we're heading for an inverted 210 spread?
It's a great drop.
I mean, is this the first discussion with particularly the regular household survey showing 650,000 job growth? Are we finally at a point where we really have to begin to
I was really going for it.
Potential curve and vision with a 2-year yield up?
DAX just shot down to 920.
Yay.
15,
Got another 2. Oh yeah, I grabbed the 2 sells on gold there. I just went in on that candle, so I got 20 and 30. So I got £50. I got another $65. Ooh.
The balance sheet is contributed to
that.
Financial conditions easing, right?
There's your NFP spike, and here is your market manipulation pullback. You know, which we trade every single day. And look at that. Did I not say gold would hit both TPs? Am I a bullshitter or not? There you go. Hit the buy.
Take profit at 1783.
Hit the sell. There you go. Look, both of them hit what I set out. Thanks to the Axe trading system, it gave me the correct levels. You could have literally just I mean, you could have entered a buy and a sell pending order and let it fly, and you'd have hit both targets. I mean, here's where the news came out. So you could have grabbed 60 pips to the upside, and you could have got 60 pips to the downside, 120 pips just on gold. So, you know, you trade whichever way you want to trade. I'm not here to teach you that, but, you know, I like to scalp how I like to scalp. But, you know, with the Axe trading system, look at that. You could have set those levels and bang.
Jeff, it's hard to believe that we're just fewer than 2 weeks.
It's good to see. You know, when you set your levels and they both get hit.
In the first week of 2022.
Now we're fixing to bounce back off that support at 1784.
Given the fact that we've gotten the meeting minutes, given the fact that we seem to see some support for a very tight labor market in today's data, that really you're going to actually adjust, tweak your view for the year ahead.
Well, I think going into this year, we had already had the view that this was a significant set of turning points, right? We knew that from the meeting. We discussed it when I was on a month
So that's $600 now.
What we got out of the
profit in 10 minutes of trading. So that's good. We're getting to our $1,000, which is the target.
I love NFP week. 2,500 profit so far.
Yeah, perfect. Look at US 30. US 30 still hasn't pulled back yet. You see, you're still waiting for US 30. It's hitting that support level. Swing this round.
Higher interest rates, wider credit spreads, and what we've seen is very little tolerance for financial.
So again, you even get that, you know, as soon as we trade every single day when we trade the news the opposite way. Look at NFP on US 30. You know, the news was worse than expected, but you still could have gone for the buy, going the opposite way, like we trade every single day. You know, I decided to go with the news once this drop. You know, I missed this spike once I saw it break here. This is where I got the sell on US 30. Obviously now you could have a re-entry look here as RSI's crept into that 25. But even so, look, you could have gone for that. You know, it just shows you the manipulation. That even though the news is bad, you still get that manipulative spike that we trade every single day. You know, even with NFP.
Great to catch up with you, sir. I'll be catching up with Rick Reeder, your colleague, in about 20 minutes' time. Catching up with Mohammed Al Aaron as well. And
So
back up 1787, 1788.
Yeah, wait for US 30 to pull up.
Just don't want to lose this moment. Free handle on unemployment, and I want to take you back to June 2020. Back then, in the summary of economic projections, the materials that the Fed puts out, the forecasts, the Fed had unemployment of 5.5% in 2022, 5.5%. At the time when they made the forecast for that month of June, unemployment was north of 10. It was at 11%. Tom, I don't know anyone that forecast unemployment to fall as quickly as it has. For that data point specifically,
Look at that candle on gold.
We have a 3 handle all over again.
It speaks to the fiscal stimulus.
Hit that support level, you see. Right on. See, that was the heavy support. Now it's classed as minor. Drops down to the next level, 1780. But yeah, look at that. So I think this will, you know, when we get the open, this will bounce back again. I think we can see it's coming back up to this zone here, back to 1793, back up to, basically gold will be back up to 1800. You zoom out, you can just see the bigger picture.
Sorry about that. You know, as I was saying,
that's great that all our targets were hit. NFP1, NFP2, NFP3, amazing. So all the people out there watching who don't know how to trade the news, this is how you do it. And you do it calmly, you do loads of research, you do loads of practice, you know, and it can be done. For all the people who miss out on it, it just, you know, I don't understand it. All these people who want money quick, you can't get any quicker than this. Yes, you can lose it quick, of course, if you get it wrong, and that's the whole idea why we're here in this trading groups here, is to avoid that. You know, even I'm surprised today I've got no red, it's all green. You know, there was no kind of mess out with the broker. Everything was really smooth today, so that's perfect.
Bro, look at gold.
And so you could have a different kind of
now shooting back up. Yeah, this is where you leave it alone now. We know in 15 minutes time we're going to be 30 minutes from the open. We know what happens, you know, at 2 p.m. my time, 9 a.m. NY. We know there's a little market manipulation, a little boost. We've seen it every single day now that we've been trading, so we'll just wait for that. We can go in on US 30, because US 30 could take a little drop. Could be a buy, could be a drop, I don't know. Whatever the candle is at 2, I'm going to go in on it, because we know you get a nice little run 30 minutes before the open. Look at US 30 now. You see, I want this to be a buy, come back, break our trend line, and then we can scalp between here and here, look, before the open. That's my plan. There's 200 pips there, look, 20 pips. So it's got to break this neutral zone, obviously. So gold I'll leave alone for now. Gold we'll just wait for the open now. We've traded the hell out of that, and we've seen it's all over the place now. So, you know, but US 30, look, is more potential because it hasn't had that pullback yet. And now you can see the RSI is telling us it wants to try. But again, you can take an aggressive buy once it crosses the average line. You can take another aggressive buy once it goes to the neutral, or you take a sensible buy once it goes green and comes out. They're your choices as a trader. I don't tell you which one to trade. The fact we've seen 2 lots of bullish divergence appear as well.
Our hopes and dreams of 2023 be pleasant.
RSI look creeping up. I'm just getting ready on US 30 because there could be a chance of a cheeky little buy on this. Gutted the news was bad. I really wanted it to be a, you know, unemployment rate forced. See how they, I love all this, how they try and make it all still good news though. Unemployment rates fall from 3.9 to versus 4.2, but that's insignificant compared to the data.
hikes with their balance sheet reduction.
You look-
And what does that then do to the Treasury market, right? Because
Yeah, that changed as well. What was that, 5.9, and now they're saying 4.7, you see.
deficits have been better.
Unemployment rate dropped. Average earnings were up slightly, but the amount of jobs added was less. People just kept away from work.
There'll be kind of this supply-demand imbalance.
You see, you had three good against one bad, but unfortunately, it doesn't matter about the others. The main one is still and always will be the NFP. As much as everyone says you want to see it all the same way, and of course we do. I'd love it if it'd been all green or all red. That's the perfect kind of scenario when you're trading fundamentals, if the news goes all the one way. But you know, you've got to go the way of, just shows you the power of NFP. Even though there was 3 good news results,
actually give a green light to the
it went how we said. It was a sell on the 30 and it was a buy on gold, you know.
This was a good report. You know, I look at what I call,
and we'll go the same again in the open, and then that's it. We're done for the week. We've got all this Fed speaking just around that time. I'm going to end the stream about before this Fed speech kicks off. Yeah, we've got to be caught up in this more manipulation. I know some guys like trading it, but I try and keep away from it.
I love it.
Yeah, I know you do. See gold, look, here you go, gold. You see you're in on the buy again, but it's hitting that resistance level. It'd be a quick scalp.
You know, will it be March or will it be May? You know, does it really
US 30, here we go, look, here we go.
Perspective, I think from
What we got? Chance of US 30. You've got a chance of anything on here?
Then what do we start pricing in May?
Points, maybe.
I think they skip May and then they probably think
Not seen any green yet on US 30 since the news, so I know it likes to push up a little bit. Which I want it to push up, you know, before the open. Nice if it fills that wick. There's 100 points there, look, 10 pips.
The idea of
Possible.
steepening of a higher yield in the 2-year we mentioned with Jeff Rosenberg, sort of the fear, if you
Yeah,
will,
you
of
just
curve inversion with
in
a
and
2-year
out.
yield
No
higher than a 10-year yield. But Ira, as you and I go back
crazy
years to
holding.
your work at Credit Suisse, do we do it with
We do it. Let's see if RSI get into that neutral zone.
instability?
Well, I think the financial markets, I think risk assets probably end up at some point correcting pretty significantly.
Consider
for
anything.
The possibility of a recession sometime in late 2023 or 2024, particularly if the Federal Reserve or the
Another gold
expectation is
trade
that
in
the Federal
profit.
Reserve will hike too much, right? If the Fed hikes
Very long
more
gold, yeah.
times this year and certainly
Love it.
pricing for you know, 5 or 6 hikes, and
Watching this US
the curve is
30.
going to invert maybe by the end of this year. I don't think that's going to happen. I think that the Fed is cognizant of their own role in the in curve flattening and basically.
Come on, RSI. Come on, push. It should go up to that level here, look, which is 53.
And again, going back,
That's what I want it to do. Would be nice.
That they want to use balance sheet policy instead of hiking in order to avoid that flattening of the yield curve that you just mentioned. And in order to do that, basically they have to hike.
Let's watch this for a minute while listening.
Pricing. But I think ultimately, while they might price for slower, I think ultimately if they do that, they'll have to hike longer and to a higher rate. So, you know, the market's still only pricing for the Fed basically to hike 6 times. So, and I think that that's probably a little bit too low given our expectations of where the economy can end up, assuming that the Fed only hikes 3 times this year. Again, if they hike more than that, then I think that the economy in 2023 has to slow pretty significantly, at least in terms of real GDP.
As you take a look at markets in response to this jobs report, you do see the NASDAQ continuing its decline after what looks like it may be the worst weekly performance for the NASDAQ going back to February of last year, down about 0.5%. Not yet a tantrum. We're not seeing it in the credit markets. Rates markets certainly have sold off, but it hasn't felt uncontrolled. When does the Fed put start to come into play, or is that really not on the table until something much more disruptive happens, Ira?
Yeah, I think that at the January meeting, I think Chair Powell in this press conference is going to have
Ranging around, look, it's got to break that trend line, you see. That's the power of the trend line. And it's right on the neutral resistance. Obviously, this is a key zone of resistance, like the daily pivot. So if price action can actually break this, then obviously we will get back up to our flat KG line here, look, which is like 10 pips or so. But as you can see, RSI is just pointing down a little bit. Might get a bounce off here. So wait and see. There's been no green at all since NFP, apart from the manipulation on the news, the reverse of the news, you know, which you could have traded. I mean, like I say, you could have, you know, gone with that, and you could have got, you know, 40 pips. So we got more than that on the sell, but you can go either way. That's the good thing about it. You've just got to know what levels to get in and out on.
If the Fed's going to go too much too fast, and so far
we've got 8 minutes now to see if we're going to get a little bit. I wonder if we get a little boost or a little drop on US 30. This, like, you know, say 30 minutes before the open. Be interesting to see.
3 to 6 months.
Gold's ranging now. It's really trapped in a range. I would well leave it alone now. The RSI didn't really break out of the zone. It's coming back into the zone now. But you've got this divergence up here. 1, 2, 3, 4, 5. Hasn't happened yet, so keep an eye on that as well. Again, expect gold to pull back down before it goes up again on the open. That's wanted to get, you know, we're looking to try and get it back to 1800. We'd like to see. There you go. Look, they're struggling to break that trend line. Doesn't mean it won't, just it hasn't got the momentum at the moment, because remember, the market is shut. But we've got this little move in about 6 minutes time. It'll be interesting to see.
Went down so much at this point, the Fed's probably going to be looking at that as perhaps a more accurate indicator of where we are. The other interesting thing to note is that in the non-seasonally adjusted numbers, retailers added workers, which is what you would expect around the holiday season. But in almost
Gold
every
spike back
category,
down.
the seasonally adjusted retail numbers are losses, job losses. And whether that is because we're seeing a trend away from brick and mortar stores, or whether it's seasonal adjustment problems because of the pandemic,
Seasonal adjustment because of the pandemic. As if there's a move away from bricks and mortar stores. The guy's an idiot.
Losses in retail, that usually comes in January.
Dow futures down 56, S&P down 8. Michael McKee, thank you so much. This
See,
is a joy.
look at that spike on Dow and then the drop down, look, you see. So US 30, that's what we're looking at. That's what we've just traded. That's what we've just scalped. You know, we're not doing anything crazier than what the market is there telling you right in front, but we're just learning where to get in and out.
Tara, do you have any idea how to count the data amid a pandemic? Is the data that you see it indeed? Is the data that we see on Bloomberg surveillance every day? Is it truly believable?
Well, I mean, obviously there's a lot of complexity here. And, you know, when we're thinking about using data for modeling or for forecasting, we're typically relying on the historical patterns being applicable to today. And so it's really hard to find historical patterns that make sense when we're seeing such novel events happening day to day, and where we keep using the word unprecedented over and over and over again. But it is still the case that our statistical agencies, for today, the Bureau of Labor Statistics,
US futures drop on spike in wages, you see.
Very hard to put out the cleanest,
Bonds fall,
numbers
markets.
that they can, and it's still important to look at this information in order to be able to have.
Let's see, US 30 looks still struggling to break our trend line, bouncing. You've got some nice support here. So again, I want to take a buy on this. If RSI gets back into that neutral zone, I'll take the buy. Back up to that spike here. Look, we'll just wait and see. Going to range around a little bit, but I'm confident we're going to get a bit of green on US 30 before we get to the open.
Yeah, well, I mean,
So we've got 4 minutes till we're 30 minutes away, so just watch and see if we get any kind of move like we did yesterday.
Right now, and we still have a pandemic going on, and that is definitely
Very interesting.
holding back participation, both directly from concerns about the virus, but also from other challenges. You're trying to figure out.
It's just going to bounce off that support.
You don't know when your child might test positive for the virus. You have to care for others in your household in other ways.
Two lots of bullish divergence.
Constraint on.
You'll have a continuation, which was
also have
right.
to remember, we still have those long demographic trends that are drawing down that overall labor force participation. So we may never get
RSI's coming back up. Look,
rates we saw pre-pandemic, because we've got the retirement of the baby boomers happening at the same time.
So this raises an issue of, is this as good as it gets? And are we going to see, for example, wages increase much more than people are expecting, because that participation rate may not go up that much higher? As you said, it may not ever get back to where we saw it pre-pandemic. What's your view on that?
Well, I still see this as a temporary maximum employment where we are right now, where we may be close to as far as we can get, but at the same time, we may still see additional improvement once we get more clarity about the long-term situation with the virus.
Tara, thank you so much. Tara Sinclair with George Washington University.
3 minutes to go.
On some of the data nuances of
The
this.
gold in a range now, so just leave that alone.
Washington University.
Let's look at silver. Look at silver. Silver banged around as well, exactly the same. For that, we could have got a beautiful buy on. There was the NFP result.
Oh my God.
So you could have got the buy on silver, and then the manipulation drop. Again, that was a great result there. Look, there's your NFP. Perfect. And of course, you would have gone opposite to the news. So you would have gone bad news, you would have gone for the buy on silver. Right there, bang. You could have got in halfway on that candle, wouldn't really matter. You just still got at least 100. Look at that. You've got 67 pips. That could be worth $300-400. You know what I mean? It just depends on your account size, but you know. And if not, you wait. You know you're going to get the drop. And once it breaks the trend line, here is the drop. And now, when we get to the open, if you want to trade silver, obviously you want to be looking at a pushback.
Adjusting back and sitting, or are
there.
we adjusting back and all the different analysis till we go even further?
Yeah, and honestly, right now, the other issue that we keep hearing again and again from all of our guests is that the Fed is not going to come in and try to rein in some of the market disruption. They want to see the markets disrupted a little less comfortable, because that is the transmission mechanism of their policies. And so how much do people have to rejigger some of their optimistic prognostications versus
Keep them back on US 30. I'm interested just to hone in and see a little break here. Going to shoot lower, or are we going to get, like I say, on the open, we're 1 minute away from this. We'll see what happens on this 30-minute pre-market spike. Let's see if it does anything. Interesting to see.
NFP dropped back hard.
We were going to do that today.
Yeah, I saw it on the other screen. It got really
like everybody else.
There you go. Look, here's the 2 p.m. 9 a.m. handle. Let's see. We get a push up now. Look.
Honestly, this is hopefully recuperating.
Happens every day.
We
what if it happens today?
Our team, it is a huge surveillance team, and they have saved us this week. This is Bloomberg.
This is Bloomberg. This is, we don't know what we're saying, but we love you. I still love it.
Friday, yields heading higher, live from New York City for our audience worldwide. Good morning, good morning. Equity futures down about 11, negative 2/10.
Yeah, it's pushing up, look. 40.
Everything you need to get set for the start of U.S. trading.
Bloomberg, tune in daily for your big money and big tech inspired news stories.
Yeah.
By inspired, I mean funded.
Is RSI going to get up into that neutral zone?
US 30?
Live from New York City.
Yes, wait and see if it's going to break that trend. Look.
Big pivot.
The minutes.
The Fed minutes.
A little more hawkish than what we got in mid-December.
We did see somewhat of a slight surprise. The shrinking
No one's bothered about this now. What are you on about?
QE to possibly to
14 news, no one's bothered about. I'm going to steer clear of the fact you got the jobs news way wrong. Pushing up the RSI 40. Go on, just getting over that average line. Break that neutral resistance.
The Fed probably won't be as aggressive as what is being floated around.
It's all contingent.
And then I'll go have another coffee, I think, before the open.
We're setting ourselves up for a dovish surprise.
I shall have my celebratory nachos. Well, I say the idea of this stream was to try and get $1,000, sorry, profit. We're at 600, and we've still got the open to come. So,
Hope that the data confirms what it is thinking.
It's
Joining us now to discuss Mohammed Al-Aaron of Bloomberg Opinion and Queen's College, Cambridge. Rick Reader of
pretty nice, not doing it, but it's trying.
Mohammed, let's start with this. You've been saying it
Right
for a
there
while.
with you.
Let's go.
500
When
for
you
the
look at
day.
labour market
Yeah,
report from the Fed,
perfect.
is that the message they get from this too?
Yeah, there's nothing in the report that will change.
And I still got runners on gold that I'm not going to close out. I really want to see that buying pressure back up to that 1830 zone.
Many elements of confusion, but at the end of the day, the fact that the labor force
That takes a couple of days to play out.
the fact that we have a 3 handle on the unemployment rate suggests that there are supply side issues.
I'll
And at
pay
the
the
end of
measly
day,
swap
the
fee.
Fed will see this as consistent with the signals that it has put out.
There's a belief, Mohammed, that we're now in a moment where it's show me why I should not hike, not show me why I should. The bond market's responding in that way too. Yields are higher on 10s by 4 basis points to 176. We're through 90 on the front end on a 2-year up by 4 basis points as well. Is that where we're at right now? Is that where the bar is, Mohammed, going into the March meeting? Never mind the next meeting, but the meeting at the end of this first quarter. Is that where we're at? Show me why I should not hike.
There's fewer jobs and forecast.
Yes, absolutely. And the markets are reacting as if this report, if anything, will make the Fed somewhat more hawkish. And there's a good reason for that, John. It's inflationary.
Be the most heavily taxed state in the nation. This place has the crappiest roads.
Expectation for
Yeah.
next week's CPI. We're looking at over 5% for core. The Fed
CPI next week, you see, as well. Again, US 30, look, just pensive, just waiting. Look, it's ranging now. So we should get a sell on the open, then a buy. That's what I'm looking for on the open. Should get a 10 pips to the downside, hit this support, and then a bounce up. That's what I want. It could come down to here. There's a chance that if it breaks this blue zone that we're going down to our heavy support, but ideally for us, I'd love it to just bounce off here and then break to that neutral. And here's a TP there. Look how flat of our baseline would be good. No, that's what I'm thinking.
2013, whenever we had these massive U-turns.
Marina got 60 pips, you see, on that push on US 30. Nice one, you see. Trading that little. Well spotted.
Good job, Marina.
It's good. I mean, you could just trade that every day. There's always a little push, a little bump, every day on that. I think it's just people getting to their desks 30 minutes before the open, having a coffee, doing some pre-market trading or something. God knows, maybe someone can tell me, but it's we've just been spotting it every day, just to do a little trade, nothing crazy, like I say, 50, 5-6 pips, but that still could be 20, 30, 40, $50, so it's a nice little bonus trade. We just saw it happen, we saw it, the RSI go from where it is now, 36 to 40, that peak there, look, 42, and that's enough to win, to scalp and win.
January of 2020, when we had only just heard about this new virus that was going to make its way around the world. You look at the payroll number that
everybody wants an edge.
Here's the revision, look.
Significantly.
Revision. That's the, hey, we got it wrong, let's adjust this.
So it looks better.
Yep.
Below the rate of inflation, and that's important to note. But we are seeing people get some additional pay, and I've been looking.
But less, you see, just means less people going into the jobs, and you would have thought it would have been the opposite, because December and obviously seasonal jobs. That's what they were assuming, is that there was going to be a lot of people back into work just to cover the Christmas period, and obviously it didn't happen.
Yeah, but everybody got the flu and couldn't return to work.
Yeah, people got scared, and other people didn't want to go and take a job. That's what I'm assuming. I mean, that's kind of what happened here in the UK, and obviously US.
Happened over here.
Yeah. Some guys who were predicting 1 million. Even I thought. I mean, I don't know why I thought that. I don't know. I like the number 1 million. Probably that's why I thought.
Yeah, but it was so wide. Whenever you've got multiple news sources saying, okay, well, it's going to be 200, then you've got one, the consensus is 440, and then you've got one predicting 900. I mean,
there's only one thing, there's only one thing you can do, and that's 100%. And I don't say 100% very often. Is that ever Bloomberg new whatever they give you the result, their prediction.
the
It never
way.
is. It never is. You know, whatever number they print, like 447K. We've been doing this for years now, and I've never seen them ever get it anywhere near. So that's quite good, because obviously you can just say, right, it isn't going to be that number at least. You know, they never get it right. Whoever analyzes and works it all out doesn't get it right either. So, like I say, less than half of the estimate. I mean, you'd think they'd get it within, you know, 50,000 or whatever, or they used to. I mean, pre-pandemic, talking 3 or 4 years ago, they used to be sometimes quite close, you know, but now they seem to be, like I said, look at that, half away from it, and they were last month and the month before that. So I don't know where they're collecting that data from, but obviously they need to kind of renew it. But that's the only thing I can stake my house on, I would, is that whatever Bloomberg print, it ain't going to be nowhere near it. but scalpers, we're not bothered. We're not bothered if it's better or worse, are we? We're not bothered, you know.
No, not at all. And the thing is, there's so many variables. There used to not be as many variables. Now with pandemic, viruses, etc., they can't predict it, right?
And they try and smudge in the private sector as well, and obviously in all these other you know, earnings and everything, all these other ones as well, which conflict.
When did they start doing NFP private? Because that's I mean, I've been doing this 2.5 years now, but that's the first time I've seen NFP private pop up on the news.
Yeah, last few months.
On the economic calendar. Yeah.
Yeah, it's the last few months.
Yeah.
To get an understanding of what the rate path is going to look like for the Fed through 22 and beyond.
So Jonathan, that is exactly pinpointing where the markets are having a tough time today. But we've been, I know Mohammed and I, for how many months on your show, have talked about they need to start taper, and we're entering this very clumsy, awkward period where the Fed is still putting liquidity in.
You know, it is a recent one that the MyFX book and that have started printing out. So obviously, you take that into consideration as well now. So it used to be, like you say, just NFP with the unemployment rate, and that was it. And
now they've added private sector in there.
Yeah.
Markets are having a tough time interpreting how much do you think they're
And
going to
again, whether that's manipulation or whatever, who knows? I don't know, just to confuse people. But like I say, it's just proven today, it doesn't matter, all these other subsidiary news events that are around it, releases, the main one is still NFP. And it makes me laugh because Bloomberg tell you, oh, you know, the underlying news is what drives. Oh yes, the headline result is going to be taken into consideration, but we'll adjust it, and it's all the other bits around it. Well, that's BS. We've just seen it because we've just traded the way of NFP. It's almost like they don't want you to. I don't know. They don't want it to. I don't know. Maybe if they got it right, if the figure was spot on, they'd go, "Hey, just take that into consideration. Everything else is rubbish." I think it's probably that they get it so wrong that they're trying to say, "Well, yeah, we were wrong by half the estimate, but yeah, that's not the real picture here. We're looking at all these other things, and unemployment rate is actually better, and blah blah blah." It's all to try and smudge over the fact that they haven't really got a clue. You know, no more than me and you. These guys are professionals. And, you know, when us as retail traders actually dip into this like we do, we suddenly find out actually we know, you know, probably as much as they do. You know, probably as insiders.
If not more.
Yeah.
And here's the thing. You've seen it many times. We've traded NFP. We get a mixed bag of news results, and then you see NFP still drives it. Once they're done with the manipulation, you get a mixed bag, some positive, some negative. Once they're done with the manipulation, it still goes the way of NFP. That is your deciding factor. But initially, it's going to be the manipulation that we trade. But NFP, at the end of the day, every first Friday is always going to be the king and the deciding factor of which way the market moves.
Yeah, especially when it's so different to what they're predicting, which is at least for the next year, I can see it being exactly the same. When we're out of the pandemic and everything gets a little bit back to proper normality, then maybe the result won't be as you know, far away from what people predict. But at the moment, people haven't really got a clue. They haven't got their finger on the pulse. So I think you're right. And what Bloomberg do, and probably CNBC and everyone else, is try and smudge it a little bit, so because they want to look good. I mean, you know, when I tell people I watch Bloomberg,
They're the world's news source.
exactly,
Yeah, they want to look
yeah.
at it.
Yeah, of course, yeah. When I tell people I watch it, they go, "Oh, I don't understand that. It's above my head. I'm not educated enough for it." And I'm like, man, actually, if you really study it, you'll probably end up knowing as much as they do. They're a news channel, like I say. So, you know, to anybody listening who thinks it's above them, it's not. You know, when I first started doing this and watching it, I was like, what the hell's this channel? You know, this is for people who are in suits all day and banking and have got, you know, X amount of doctorates in finance. No, 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 no. That's what they want you to think, so that the riff-raff retail traders, as you say, as we are kind of thing, keep away, because they don't want us dipping in and slicing and taking money out of the market. Of course they don't. They want to keep it all for themselves and your Goldman Sachs and all your big, you know. So we're screwing the system up by actually educating ourselves and nipping in and out and grabbing some of the money. And that's what we're trying to educate people in our team, is that you can do this. It's not easy, but you can learn as much as what these so-called professionals are, you know. So,
Yeah. Oh, it's definitely not easy. 2.5 years of education, many blown accounts,
yeah.
And I'm just now successful because I had to learn those lessons the hard way. But once you learn them, they'll stick with you as long as you don't give up.
Yeah, that's it. It's repeat, set, repeat, set, repeat, set. That's it. You know, and if you find that boring, then hey, you're not going to make any money. But that's what you want. I don't want to be doing things different every single day. That's when it gets scary. I want to be using the same system, the same strategy, the same way of trading, the same lot sizes, the same account size if I can. You know, this repeat, repeat, repeat. Then, like I've always said before, things don't get so scary. Once things are repetitive, they become second nature, and you don't get scared of trading, being in drawdown, losing an account or whatever. You just pick yourself up and start again and go with the system. You know, we've all done that.
I've told many people that have tried this, if you can't be comfortable with a little bit of drawdown, you'll never be comfortable with a little bit of profit.
Yeah. Yeah.
I have said that, and I've championed that to anybody that I've taught and I've mentored since I've started. If you can't be comfortable with a little bit of drawdown, you'll never be comfortable with a little bit of profit.
Very true. Yeah, that is very true. That's why, you know, people end up, you know, getting out of a trade too quickly and holding on the opposite way, or, you know, just, yeah, you're right. People get scared. You know, every trade I enter,
and I mean,
you're in the red. You're in the red pretty much straight away.
Hold. Well, I mean, spreads, take spreads into account. Obviously, as soon as you enter the trade, you're in the red, unless you magically caught the bottom and you're going all the way up.
Yeah.
But that rarely ever happens.
Sometimes
And
it
the
does,
thing
but yeah.
about holding a trade going the opposite way, I've had trades that I've held for a week. But as long as your risk management is key, and you're taking that into account whenever you're placing your trade, leave your margin open. That way you can place the trade the opposite way and capitalize on that move. But as long as your risk management, you're not over leveraging, you're not using all your margin, you can hold it for as long as you want. It's going to go your way eventually, unless you sold at the bottom or bought at the bottom, sold at the top. You know, it may or may not go your way, but
yeah, that's it. Yeah. That's why I used to make mistakes. Is you get into a trade too late, and you're, like you say, you're buying at the top and you're selling at the bottom. And that's why I always say to people, if you do miss out on an initial, like if you missed out on this, you know, on the trade on NFP here, is you just wait, catch the next run the opposite way or continuation. You know, and this is what our system at least gives us a chance is that you can do a continuation trade like here, or like I'm waiting to see if I can get a buy. Might not now because we're 10 minutes away from the open, but yeah, this will drop on the open and it will then bounce back up because we've had so much red. There's going to be manipulation to the upside. You know, we know that's how the market works. There will be a drop down again, you know, and then we'll have the push up, and this will be our the further this comes away, the more this neutral resistance zone is going to be the kind of your potential TP.
New York City with futures slightly negative on the S&P 500 and a sizable move in the bond market this week.
Missing that buy on gold.
From New York, this is Bloomberg.
Yeah, gold was great. Look at that. See, could have got in on here. Just broke above that the points of interest line, and you could have got yourself a nice. Yeah, look at that. 24 pips. Easy. Told you it would go back up. Now on the open, you see, if it holds here, this would be perfect now, and we're going to retest our TP. Here's our breakout zone. Here's our breakout zone. Look, the green dots. Our breakout zone. Here's where it hit with NFP, and gold wants to retest it, break it, and it wants to be back up to this level here, this 1800.
1796, 1800 area.
Yep. There's our extension, 1800. So this is where I hope gold's going to go to. Again, we could get a little pullback before we get that. So again, you know, if you're setting like a buy now, your stop loss would be below this zone here. It's stupid to set a stop loss inside the zone because you're going to get spiked out. You've got to put the stop loss where it tells you to put a stop loss, which is below the safety of this support zone. You know, then that's as good as you're going to get, and then your TPs are going to be up here, so you can do that. You know, you put a buy in and easy maneuvers. Like here, and I don't look at what the risk to reward is. I look at what the stop loss is, what the chances of it hitting it against. You know, that would be your long-term outlook, almost like a one-to-one.
What's the stop loss?
The one-to-one.
What's a stop loss? I don't understand that word.
Yeah, I know. Don't. It's just for people who ask me, you know, because you know, I do use it when I have to go to the bathroom, and I use it.
Yeah,
I use it when we do the Asian
trades.
When we do the Asian trades, yeah.
If you're actively managing your trade, there's no need for you to set a stop loss.
Not when you're watching it like this. See now, look, we're above our trend line. So I wonder if we're going to get a nice little push up before we get a push down. So we're above our average line. Look, would be nice. We could get a manipulation buy on the open before we get a sell, but you know, it will go both ways. We know that.
The business came back very quickly when we got past that variant.
Let's see if I can grab a buy and sell, and then obviously on gold I want to try and get a continuation of the buy back up to here. Be nice.
We'll see some bumps, but we don't think it's going to stop the recovery.
Yeah, plenty of room. Again, just 100 points, not doing anything crazy.
Followed by a bounce. Meanwhile, in Europe, Germany looking to reimpose curbs on restaurants and cafes.
Oh,
I really don't want to sit on these trades over the weekend.
Look at that.
Bloomberg's Anne-Marie.
Germany. See, this is why DAX dropped. Look.
It's a really wide spectrum in terms of what is going on around the world and how nations are dealing with this. And it feels like deja vu from 2020. You have
Germany's screwed, tell you.
China, Xi'an, still in those
What happened?
I
missed it.
This is nearly
Germany
starting to tighten those restrictions on access to public places like restaurants and cafes. The United Kingdom is sending in armed forces to help with these staff shortages in London hospitals. And then in the United States, you have
we've got the army helping out in hospitals now, apparently.
In the medical journals, urging this administration to take a new approach, a new strategy. This is the new normal. We need to learn how to deal with it because this virus is not going away. That's where their words and their advice to the president. And Jonathan, you see in the United States, businesses once again, like 2020, encouraging people to work from home. Like
I had the Pfizer booster. I did.
Controversy
So I had my 2 AstraZenecas and then my Pfizer booster. So I was totally fine. I didn't have any kind of. I think most people say if you have the Moderna booster, that's the one that gives you a, you know, bad headache and a reaction. But I was totally fine. I had more reaction drinking my gin and tonic. that gave me the headache. I was like, look, I'll show you what a headache is. My lemon infused gin, which is really nice, which someone bought me for Christmas, was nice. So that's what that's the only reaction I had to having the booster.
Paradigm, you know, I think we were on your show a bunch last year, and we're talking about, gosh, the equity market's got some upside. It's got some upside. You know, I think you had to think about, so, you know, you think, take a step back and say, gosh, if we think growth is going to be pretty good, and let's say it's 4.5, 5 4s, corporate revenues can can generate, because of operating leverage and because of pricing power, can generate revenue growth of 5 to 7%. And so, what can your earnings be? I think people are undershooting earnings. Maybe you get earnings, I think could still be 15% growth. But you've got a tightening. We're in a tightening environment. So maybe your discount rate comes down. So can equity still get you?
Gold, yeah, just sat just nicely up. Gold sat nicely. A little push up. US 30 sat nicely for a push down. Would bounce off this points of interest line and go up after an initial spike down. But again, look at that. We've got 100 points, you see. 10 pips, that's all we want.
People still need yield.
But we've got 6-7 minutes yet. We're not going to put any trades in yet. We just watch.
That's something to think about in the fixed income market quite a bit.
You can see the futures here, look, all pointing to the downside.
Last year at 177. Right now, 3 basis points south of that. Why is this time different to last time around when this whole story stalled out pretty quickly?
I think this time is different because the Fed policy stance is different.
Come on, I need a little bit more.
This time is different for the economy. We are learning in a very
You're as bad as me.
non-uniform way to
Hey, look, I rounded up to $1,000 for the live stream, but 600's fine. So.
Yeah.
But
who do you think trained me?
Yeah, I know. Get a bit more would be nice. Try and keep it all green today. But, I mean, usually you get a couple of red trades, because just you can't close out because of the broker. But actually, IC markets was spot on today. It was.
And supply chain issues.
It was bang on. If you look on the 15-minute chart, which I've got open on another screen, on US 30, it's one big massive red candle, which is what you'd expect. It tend to have a boost up, but overall, the candle was a big massive bearish candle, bigger than the last 20 or 30 15-minute candles. So, that's just proof how NFP works. Now we're looking, it's trying to push up, look, there we go, look, which I want. It wants to push up before it pushes down. 4 minutes to go, 4 or 5 minutes to go before I put a trade in.
With Anastasia Amoroto of iCapital and Michael Collins of PGIM from New York City.
Coming up.
This is Bloomberg.
And we've got to, like I say, I want to end all the trading before we get the Fed speaking. We can let them crash it out.
What time are they speaking?
30 minutes after the open. So gold just in a range now. Look, sat US 30 trying to push on up.
You saw what happened whenever FOMC hit the other day.
Yeah.
Straight bottomed out the market.
Yeah, it was good. That was great. That was. There's your US index. I'll just screenshot that for everyone in the group. See where we're at. There's still plenty of room for the drops. You see, it's only 4.7. So there's still room for more sales, basically.
I'm here at the Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft.
Yeah, gold just sat on support now. US 30 just sat on resistance. So both are exactly where we want them to be. I want to get a cheeky buy. I want to get the sell obviously on the open. I want to get the buy as well because that's looking like a nice line just here. Look, you can see flat KG line, perfect. The longer that line is, the more you sit up and take notice of it. Here you go. Look, see, nice boost up, and then there's the line. So if it hits that, it could come back down again. So still got like 3 minutes before I'm putting any trades in. Green triangle. Didn't mean anything to me. I don't really follow that, but it's back into the neutral zone. 48. Yeah, I've got hidden bearish divergence if you see on the chart. 5 candles from. So, like I said, I like to see it go the opposite way just before the open, and then you've got a good chance of it spiking up, hitting a TP if you're putting a buy in, and then clearing out your sell, which is obviously what we're looking for based on the news.
What an interesting moment for financial markets worldwide. not so much captured by this chart right here with S&P 500 futures doing absolutely nothing, NASDAQ 100 futures doing absolutely nothing. Much more captured by what's happened in the bond market this week with 10-year yields aggressively higher. Up 2 basis points on a day to 174 on the week, up by 120. Let's get you some morning calls quickly.
One market is the yawn market.
The analysts seeing limited downside.
Gold, look, just gonna, it's trapped. We've got a nice little triangle on our trend now, so we've got a nice zone here. Hopefully we'll get a bounce up, and then we'll probably get a bounce down. And look, you've got a flat KG line as well, so that's pretty cool as well. For it to bounce off, that's a good support zone. There's a good zone to buy gold if it does dip down this way. Obviously on the open, I'm looking to catch 5 to 10 on the buy. Let's see what we can do. It's loading up. We've got it all on the chart. Yep. US 30 look, starting to dip already in anticipation. That's your NY open. I'm just putting that in there because it's going to be a drop, and I'm looking for a push up at some point as well. Doesn't mean that's going to happen straight away. We know what happens, but
when you think space, you probably think one space agency that travels under the radar is ESA. Which is surprising considering what the European Space Agency has achieved.
See what we get.
How vital it is to the global space industry.
US 30, I'm sticking on US 30, sorry. Okay, look, again, look at a beautiful range. I love seeing a range like this because you know you're going to get a move, and probably move both ways. So that's the good thing about a range. People don't like ranges. I like ranges.
That means I can scalp them.
If we want to have a successful
Exactly.
missions to Mars, we are going to have to learn.
Got a breakout zone to the bottom here. We've got a breakout zone to the top there. So could get it. We could come all the way down to here. You see.
Can ESA help humanity take its next giant leap?
Right. Let's get in. Nope.
I was actually given a handbag by my mother when I was about 16, one of her old handbags, and I remember how it made me feel. And I think fashion is fascinating for the mood changing, the confidence boosting aspects, so the sort of tribal aspects of what fashion does.
One minute to go. Here we go.
Crypto.
Watch those spikes.
Have a world of young people that want their own financial system and their own culture. And it is very powerful.
Brilliant. Close some out already. In 30 seconds. Waiting for gold. US 30 look. Told you get a boost up look. I just cleared out a couple of buys. And now I'm going to grab the sells. Beautiful, $200. And now I'm just going to wait for gold. Look at that drop. Look at that. Hit it. Hit that TP. Hang on. I've got the buy and the sell on US 30, as I said.
Unchanged on the S&P on the week, a little bit lower on the NASDAQ, a whole lot more. Futures this morning, unchanged going into the opening bell. Switch up the board and get to the bond market. What a move it's been. Ending 2021.
Now wait for gold.
174.43 off the highs
Look
of
at
the day,
gold.
by just a couple of basis points on 10s.
Dip down look. We're going to get a push up on gold.
And crude going
Wait and see. We'll get a trade on that. So I got 4 trades on US 30. Buy and the sell. Like I say, I cleared out 38.43. So that was £100 and then another 110. So we got nearly $300 there.
Anastasia, of course, first to you. The first word,
perfect.
Your response, your reaction to the payrolls report from an hour ago.
Well, good morning, John. The payrolls report to me suggests that we're inching very close to full employment. I mean, we got 3.9% on the unemployment rate. And if you look at the Fed's own forecast, we're expecting us to get to 3.5% by the end of the year. If you look at consensus is expecting to get to 3.6 by the end of the year. But
Yeah,
it looks
perfect.
like we're making much more progress on that than consensus in the Fed expects.
Nikki's got in there as well. Nice one. Well done, Nikki.
You've got the
Brilliant. Let's wait for gold now to push up. Look, come on.
progress and it's moving higher. So to me, this report
Told you it would
suggests
drop first.
the economy has normalized to a
Got a
great
hold.
extent.
Look at that on
Job
US 30. That is just perfect.
So that should, all else equal, means that the Fed should normalize its monetary policy.
Told you it'd be the sell on US 30. It just spiked. I knew it's always going to spike up. We know that, but we know the direction trend's going to be to the downside.
The Fed's doing right, is full employment and stable inflation.
Look at it pushing down. Look at it. Look it go down now. Look at that.
Powell indicated that. I think there's full consensus on the FOMC right now.
Just want to see gold bounce off here. Look, neutral.
Notwithstanding,
Go back to 62.
I think just about everybody.
I'd like to get a nice buy in on gold. That's on positions.
Now it's all about the other mandate. It's all about inflation, which is really getting the Fed nervous, and they are going to chase this thing, and they're going to hike pretty aggressively, certainly in the beginning of this year.
Two words I heard there. I heard aggressively from you, Mike Collins. From Anastasia, I heard normalization. Anastasia, I want to start with you. What is normalization in an economy with CPI set to breach 7% if you believe the estimate for next week?
Well, it seems like we need
So easy that was. So easy. Like I say, sometimes you can just go both ways if you want, but we just knew there was a good chance of it. So I'm not taking a buy yet. I'm waiting for the buy on gold, but took the sell on US 30. Look at that. Smashed our TP perfectly. Took the buys out, hit the TP on the buy, hit the TP on the sell. That's perfect. And we'll just watch gold. That's what I'd set. If it breaks this zone here, it's a difficult resistance zone, you see, for it to break. But again, we're in the neutral zone.
There's going to be some choppiness around this as we digest this, new normal monetary policy. But equity markets
get back to here.
Are going to be fine because the earnings
I'm looking for on gold. Will be my last two trades.
Fixed income markets. We already saw it last year, and I think we can have a repeat of performance for the fixed income markets this year because yields are bound to rise across the curve. I mean, just take the balance.
See if we can get to our target, which is what we set.
The reinvestment, the aggregate reinvestment, is something to the tune of $700 billion that would not be reinvested in 2020.
Since NFP came out, we've done 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 trades. 16 trades all green.
Yeah, I was enjoying the conversation with Rick Reeder and Mohammed El-Arian about what is neutral, right? And I think we probably
now we look to take a buy on gold. Want to see if it bounces off that. Look at that.
Range on the funds rate over the next couple of decades should probably be -2 to 2, and maybe zero is going to.
Adding up what we've got so far. Obviously, the idea was to get to that magic 1,000.
Zero is kind of easy. 2, in our mind, is probably really tight, given the demographics, given the debt dynamics. So maybe 1 is neutral, right? And the markets are pricing in a funds rate of about 1 3/4 to 2%.
Watch
for the next
gold.
few years. The Fed, as you know, wants to get the thing up to 2.5. They think 2.5 is long run neutral, meaning some of them would go above 2.5. You saw the recent dot plot. There are some FOMC members that want to get the thing to 3 or 3.5, and then ultimately get it back down to 2.5. And I think if they get it to 2 or 2.5, we're gonna that funds rate will be at 0.
So far, we're £685.
And it's up to everyone
685, which we times.
In the bond market. If you think neutral is somewhere close to 1, a 10's a buy, a 175, a 30's a buy, a 2.1%.
$924. Oh my God. So near, yet so far.
Again in October, and it's right there today. So that's, probably kind of a really flashing green signal for us, a value signal. Yeah, can it go up to 2, 2.25? Sure, but over the long term, there's going to be value if you hold this thing now and hold it for 3 to 5 years. The 30-year keeps hitting newer, lower highs, right?
Well, that's good enough. If we don't get the buy on gold, that's close enough. Say, because gold looks like it's slipping down, looks going to manipulate against, so that's fine.
We have our biggest overweight.
Some interesting calls from Mike Collins there with the UTI this
We'll just
morning.
wait for RSI to. Well, it's gonna. Look at this line. Look at this line. It's gonna bounce off here. That's what we want. This is a good support line. So hopefully we'll get a bounce up on gold here. I'm just gonna wait and see. Probably get a buy-in on gold there.
Hey, John. Well, this month, this week, the start of the year is really feeling a lot like 2021 with this rotation to value and cyclicals out of growth. Very brutal.
That will be my last two trades.
Energy index for the S&P 500 up about 9%. The KBW Bank Index up about 9%. That is the best gain for energy going back to March of last year. And for the banks, the best month, or excuse me, the best week going back to November of 2020.
Bounced off it nicely.
On the other hand, you have the tech index falling about 4%. The NASDAQ right now on pace for its worst week since March. And the
Brilliant.
China tech
Done it.
index
Just closed it.
There
you go. 2 buys on gold on that, and I got 75 and 48. So we've done it. We've done it. That's it. We're over $1,000 profit trading NFP. Beautiful. There's the 2 buys. Just printing that into the group.
Relative to whether or not the tech selling is over, Morgan Stanley seems to think yes, but Susquehanna, Chris Murphy yesterday suggested there's not enough stress showing in these markets yet. One way to look at it is super interesting. Relative to rates back in March of 2021, when you had the 10-year yield around 175, right around current levels, the VIXN, the NASDAQ 100 VIX,
and watch that. You might get even more buys now. We've done it.
At that time, right now, just not showing the same stress, suggesting that rates going higher could bring that stress about. But in other words, tech selling may have more to go, John.
Abby, thank you. Anastasia, I want to turn to you. What's the playbook to work through this choppiness early through Q1?
Yeah, I think the playbook is to be a little bit contrarian here. Is of course it makes sense that the banks are rallying here as the yields are rising and some of the reopening trades are picking back up. But I do think that those were primarily the trades for last year, and they're kind of
buys on gold
so far this year. But I would actually be thinking about peeling back some of those gains in the reopening names and maybe even in the banking sector and things like
Brilliant.
Semiconductors.
Well, happy with that.
And I would be looking to pockets of weakness. Of course, John, it makes sense that the technology sector and specifically software is under pressure today because it's just math. If we have to discount those cash flows at higher rates, of course, mathematically, those valuations get reset lower. But I think what's happening right now is the valuations in the software space and things like cybersecurity are resetting significantly lower. For example, the average cybersecurity stock is trading 30% down from its 52-week high. Did the fundamentals change? No. Actually, if you look at cybersecurity spend, it's going to be double what the overall tech spending is going to be for the next few years.
I'll put it on
a lot of these companies that are
Instagram.
Add something like 8
Delivered
or 9
what we said.
Sales multiple, and they're growing revenues at 23, 25%, which is better, of course, than the S&P. So I think what you want to do in Q1, you want to use this choppiness, you want to use this adjustment process where the world adjusts to higher yields and
Wonder if we can get any more
you want to use that to rotate and
buys on gold as well.
So I think you make up that shopping list, and for me, I would put some of the software
pushing
names,
back. Look,
cybersecurity names with strong fundamentals and lower
wait.
multiples on that shopping
I'm going to end the stream in about 15 minutes just before the Fed speaks. So, got no positions open at the moment, but I am looking to try and take a buy. If this goes green and pops out, look, we've got a chance of taking a buy between here and here. Look, and that is another 100 pips. So, thank you, NFP. Thank you to all this.
Focus is this morning. It's on an unemployment rate with a 3 handle. It's on wage growth rising pretty decently. Average weekly hours coming up. If you're looking elsewhere,
look at him trying to sell it as good news.
Word coming down. Average hourly earnings coming up 4.7%. 4.2% was the estimate, so that's a decent surprise there, in line basically with the previous month as well. Mike Collins, we've been talking about the reaction in the bond market, recalibrating expectations for the Federal Reserve, what it means from the equity side. Can you tell me what it means?
18 minutes till the Fed speaks, so
yeah, I mean, I really agree with Anastasia.
Look at that spike, look at that. So there's gold, look. US 30, as I said, look, did I not say it would hit both ways? Look at that. You took the sell on the open, hit TP, as we know, and then the buy as well, which I said, you know, there's a buy to come on US 30 because it's been red for so long. We know that's what happens when you see so much, you know, there's a hidden divergence. Look, that was 1, 2, 3, 4, 5, and that was correct. Obviously, the manipulation because of the open. You've got to expect this drawdown. If you're going to trade the open, you've got to expect the drawdown. But pick your direction and stick with it. You know, I cleared out a buy and then I took the sell. The buy was a bonus trade because I knew you'd going to get. You've had so much red. There's going to be a manipulation to the opposite way, even though we're trading with the news and going in the direction of the bad news, which is worse than expected. But as a fundamental trader, you know you're going to get these spikes. Well, rather than be freaked out by them, trade them and win on them, and then still go in the win in the direction that you're expecting to go in, which we did. So that's what I'm attempting to try and teach people: is don't be scared of spikes, embrace them. This is your money. This spike here could have been your money if you wanted to trade the reverse of the news. We traded with it. But I knew we were going to get some manipulation the opposite way. We know it. We don't go, oh, why is that spike? Oh, scared me, I'll end the trade and I lost. No. Understand how the markets work. Then you can trade as we do and aim to be profitable. You know what I mean? It's not every day, of course. After some ranging around the sell, now US 30 is coming down and trying to break, because look what we've got. We've got this as a heavy support zone now. So see some ranging around. I'd like to see a buy because I just like to buy. I like buying US 30 rather than selling it, but you know, we'll wait and see if this comes back up. It's got to come up past this 36324 zone really to be an official bullish move. That's what our breakout zones tell us, is where it was still actually in a range. Even with NFP, all we've done is hit the top and bottom of our range. There's been no significant break yet. It's on the verge, on the downside, but there's no break. So we've just literally earned all that money trading a range. If you know what you're doing and you've got the right system, then you can do it, as we've just proven. Gold, look, you see, it's fighting. Come back. I'm still waiting to get the buy. Again, here's our breakout zone for gold as it wants to edge back to that 1800 zone. Still confident it's going to do that. And it's waiting now, see if this pushes up. Brilliant, got it. Yes, there we go. As my last two trades, I got 16 and 17, £35, $50. There you go. Hit our line, look, and I took it. That's what scalping's all about. Don't mess around. While I'm talking to you, I was in and out. They're my last two trades for the day. Bang, I'll just post them into the group.
Open its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Billions of people here.
There's another $50.
More people from Australia, China, and Europe to come visit next year.
It's like DAX is about to finally break out of that zone it's been in.
To deliver what you need when you need it. Now,
Back above 16,000.
Yeah. Look at the push up on gold now. I told you. You see, this is just manipulation. I told you, if you had got a buy in from the open now, look, you're in profit. Even just hold it, because I told you your stop loss would be here. This is the whole thing about this. You know, people panic when they see candles going against them, but you know, where was the open? The open was here. There's going to be your stop loss. Conservatively would be below that baseline. It would be in the middle of the zone, so you could say there, look, that's not bullshit me back testing. This is where you actually put your stop loss. So you wouldn't have been stopped out. You'd be in the zone, walk away from it, go and do some shopping, cook some food, whatever, come back, and now you're in profit. And now you decide, do I want to take that profit or do I want to wait? But look, I told you, look at gold pushing back now. RSI is about to break that level, which I set at 62. There it is, look, pushing up right before your eyes. That would have been your trade if you took the buy at the open. Not a problem. Now you're
Wall Street opens lower as a labor report tests market nerve. Dow down 30. What's it say? 30 points.
Yeah.
Good morning, John. I noticed you didn't.
So gold is going to push up. This is just manipulation. We know this is just gold manipulation. So it took time, but with that, it never went red on the RSI, never broke out the neutral zone. So why the hell would you be ending a trade if you were holding a buy here? You wouldn't. Yeah, you could be $70, $80 down, you know, draw down maybe 100, but you still know the market structure. This is going to push back because of all the news and because you're looking at your RSI. And look, it's pushing back now. Now you'd kick yourself. You've ended the trade here, you'd be like, oh my lord, you know, usual thing, it's gone against me, now it's gone with me, because you're not looking at the structure, you know, and you're not believing in your analysis of the news and the fundamentals. Now gold, now you would have been in profit, and I've just taken $50 on that little move. And then US 30, there you go, look, US 30 now pulling back, there's the buy. Oh, could have got the buy, look at that. I told you it was going to go green at some point, here it is. Now you want to wait now, because it's wicking down, so you want to wait. It's going to push that wick up. This could, you know, where's the last level? Look, there you go, look, put a line across, so 64. So this could push up, and here's the resistance. I told you that would happen. The open, bang on.
Interesting time for a market that already thinks they know what these people are going to say. They just don't know who else is going to be on the Fed saying it.
So the NFP sell, NY open sell, and then you get, eventually you're going to get the pullback. Now it's grey. Look at it dip down, so you wait for RSI to go green again, and you can take the buy, and you can scalp that level on the neutral back up to that flat KG line. Again, 10 pips. Keep looking for the 5 to 10 pips. You're going to be safe. It goes red, you take the sell. You know.
That's going to be interesting to check out, because the Fed's telling the transitory story. They still think we'll see inflation.
Get rid of my emails.
What's driving inflation, and will it be able to?
I'm going to post those results
People write in, and they want to ask you a couple of questions about the two surveys
on the Instagram
that are conducted. That one produces the headline payrolls number, the other one produces the unemployment rate. Now, for a lot of people who aren't familiar with this, Mike, I know you can give us the clinic on it. There's this huge divergence between the two, and you talked about it about 50 minutes ago. I'm trying to understand which one, Mike, I should be following right now.
You don't know.
I would say follow the establishment one, because you can adjust the household one, and when you do, to use sort of the same criteria, they come out about the same. Here's the thing: the establishment survey surveys companies around the country, and the household survey
pushing back down.
So the household survey counts people who aren't counted, like independent contractors or
I've already ended the trade because it hit that TP, retested the NFP TP.
The household survey counts you as employed, and you have
neutral.
To be in that, payroll period.
You only get out of the trade if either you hit your stop loss or it breaks the average line, obviously, and goes red. Then you know you're going to take a downside, so you get out of the trade. So if it bounces off here, it's a good chance to take a buy again.
For us as amateurs to look at this, imagine what it's like for the Fed to try to figure out what's going on.
Mike McKee, tremendously difficult. And I would say, I might suggest that over the last couple of years, given the amount of business formation we've seen in America, maybe there's an indication there on where you should be looking.
Got to break that trend line, you see, and then you can scalp between here and here.
Amoroso. Want to get your top picks. We've talked about that briefly, but Mike, can I come to you and just get a little bit more detail from you on where you want to be? Away from the 10-year, the 30-year in the Treasury market, where you want to deploy capital to get some solid returns.
30 also dipping.
Yeah, in fixed income, Jonathan, just because we think interest rates are a little higher than they're going to be on average over the next few years, you don't want to sit in a lot of treasuries, right? I mean, they're really low yielding instruments, certainly relative to inflation. It's all about the credit market.
Watch for more buys.
Idea. We like high yield still, even though the valuations have performed really well, but the fundamentals are improving so quickly.
Aims for 1800 again.
These are passing through higher prices, right?
We know that that level is a magnet. Has been for the whole year, isn't it?
Anastasia, final word.
There's your trend line kicked in now. Look, so you've got this trend line to support.
In 2022, both in the equity markets and fixed income.
So it's trapped in the triangle, the Bermuda Triangle, I call it. So you just wait. You just wait until there's a break below or break above. Simple.
500.
Sit on your hands, make a
look
coffee.
to the venture capital market for that historically produced
That's
very
gold.
strong returns.
And
I
on the
suspect
US
that
30,
continues this
there
year
we go,
as
we're
well.
pushing up.
And the
Yes.
second thing, and
See, I
Mike
told
mentioned
you
this,
we'd
is
get
we're
that buy.
at
You
the
could have
rate
traded
shock
that.
absorbers
Everyone was
and the
watching.
inflation shock
Would have got in
absorbers
on
in your
that.
portfolio.
As soon as you
And the
go,
list
as soon
that
as you
we
saw the
have that
green,
includes things
the
like
RSI,
private
as soon as you saw
credit,
the break of the
the
neutral
portfolio
zone,
that is floating
bang,
rate
and there would have
has
been
a
another
very nice
100 pips
spread
and it's
over
hit that
LIBOR and SOFR.
resistance.
It has, I would look to real estate markets that give you that inflation pass through. I would look at some of the relative value hedge funds. Mike mentioned this, that now is the
There's the
time to
pullback
get the beta and
after
get the
all the bad
alpha.
NFP.
You do
Because
that
it's got
with
to
relative
regain
value.
something because
And the
it's had
last
all
thing I
this
would say,
loss for
John,
such a long
is if
time.
you look at the volatility, it is reset
Relatively,
lower,
I mean, I'm
but it's
talking on a
not
3-minute
back
time
to
frame, but to
pre-pandemic
me,
levels. So
it's a
selling
relative long time,
volatility,
you know.
selling options, getting
All
that
this red,
premium is
all the
another
red on
way
the
to get
RSI.
income into the
And look, you've
portfolio
had
as well.
1, 2, 3. You've had again, you've had that bullish divergence. Look at that. Spot on. 5 candles. 1, 2, 3, 4, 5, and bang. Accurate. Again. It's amazing how accurate these divergences are when you use it with what you know about the market, which we know we're waiting for some kind of pullback to the upside. Here was your trigger, basically the divergence telling you we're going to get some kind of pullback. Yes, this could drop further down now. Doesn't matter, we've already won again, you know.
And in addition to oil prices, which were higher,
Like I say, I really want US 30 to get back to this breakout zone, heavy resistance 36327, so I can put some more buys in above the extension. Get some more buys in up here. This is where I'm aiming to get this zone here. So I'm going to put my to get back to here. Ooh. That's what I want to scalp up to if it breaks our blue zones here, our resistance.
A risk sentiment gauge that is not really good news, and taking with it some of those crypto stocks as well.
So I'm going to end my stream now because we're coming up to the Fed speech. I've got no trades open. Like I say, we've done
engage in the crypto market, really
20 odd trades, positions, whatever you want to call it, and we smashed our target. Like I say, we're well over 1,000, so that was quite nice to do. Shows you can do it using the Axe trading system and market knowledge, information, you know, fundamentals.
177.42. That came at the end of the first quarter. We are that far away from it. More still to come on this program. We'll break down the price action in equities and in bonds, and we'll bring you the trading diary as we count you down and push your way from payrolls towards CPI.
Great session.
Next Wednesday from New York. This is
Yes, sir.
Brilliant. Look at gold and see if that is going to break whichever way. We're just going to say it's going to wait for it to break this Bermuda Triangle of ours. But thanks to Justin for joining me from the States. It's been very nice talking to somebody. And thanks to the rest of the team who've been watching in the background and joining with some of the trades as well, seeing some of the results. So everyone's done really well. And that's it for this week. NFP week, first week of trading back, and it's been successful. Hope everyone's done well out there. And again, join us again for more live streams next week as we move on forward. Yeah, until then, trade safe everybody, and happy NFP day, and enjoy whatever you're doing for the rest of the day, and I'll see you on the next live stream. Take care all, and see you later, Justin. Take care, mate.
Cheers, brother.